Hey guys, Jared Wesley here, Live Traders. I hope you guys are doing well today. I wanted to take a minute and go over a trade that I took today in the chat room, the Live Traders chat room on CTXS. It was a really beautiful breakout, and I don't necessarily want to go over the pattern so much as I want to go over how to get filled. You see, I've been doing this a very long time, guys, okay? On Wall Street as a buy-side institutional trader, and then as an intraday trader for myself for about 14 years now, okay? And one of the things I very, very rarely see talked about in the industry is how to get filled on trades, slippage that you incur on trades. Okay, so everybody wants to talk about, well, buy the breakout over here and put your stop here and there's your target and everything is good. But what they don't talk about is not getting filled. And, I did a trade review yesterday on some other trades about not getting filled, but today was really, really pertinent because I had a couple members in the chat room telling me about how much slippage they got on the entry of this trade, plus how much slippage they got on the exit of this trade. So I wanted to really talk to you guys about different order types. Okay, there are market orders, there are limit orders, there are stop market orders, there are stop limit orders, and there are various other orders, order types out there. Those four that I just listed are the main types of orders that you guys are going to use as swing traders, core traders, and intraday traders. So I wanted to go over each one of those. So before I go over each one of those, let's take a quick look at CTXS and see what I'm talking about. So we can see on the chart here, guys, that CTXS has this beautiful consolidation at 101. This is a 1 minute chart, okay? So it dropped, bounced, retested, and popped, and then it just stayed 101, 101, 101, 101, 101, right? And actually popped over to 101.02, 101.01, 101.01 a couple times, okay? So I put an order out there, as you can see down here. I put an order out there at 101.00 with a stop at 100.70. But notice, I want you to read that clearly. I wrote in there share size for a 40-cent stop, share size for 0.60, even though we're going to be using 0.70 or even 0.80. So if you go to the bottom of the base, right, take a quick look. The bottom of that base right there is 100.70. So that's where I put the stop. You could have gone up to 100.80, but I knew, guys, with the spread that this stock has right now, you can see on the level 2, the spread is only about 5 cents, 4 cents. Earlier when we took this, the spread was about 10 cents. What does that mean? What that means, guys, is that if you stop out on this thing, you're going to get slippage. Now, some of you don't know what slippage is. What slippage means, guys, is that your intended exit is 100.70 if you're wrong, but you're not going to likely get filled at 100.70. You're going to get filled lower than 100.70. Okay, so in this case, I said, hey guys, add 10 cents. Add 10 cents to your shares just in case you get slippage so we can mitigate that risk. And I keep my order entry box open at the bottom here for you guys so you guys can see that, right? So CTXS, you can see in the very first trade there, guys, okay? And by the way, I'm in West Coast time, so 7 o'clock means 10 o'clock, all right? So right here, you can see my stop market order, okay, is at 100.77, all right? My target was 101.54. I was looking for about 2 to 1 on this thing. Okay, now notice I got filled for a partial position at 101.00. I was giving this stock 9 cents, 8 cents of room, and it filled me for 500 shares. Okay, it filled me for 500 shares. But what happened is the stock, as we can see it over here, right on this red bar right there at 10:20 in the morning, it came back against me. Okay, so it never really broke out and then it came back against me. It popped up by a penny or two. It filled me for most, not all of my shares. I was trying to get about 1,300 shares of this just because of the slippage, right? And it came back against me. And notice it went down to 100.55. Look at that box. Look where it says low, 100.55. Notice my fill, okay? My fill on this was 100.81. Okay, now what I want to talk about is both sides, entry slippage and exit slippage. They're both extremely important, guys. Okay, so I had some traders in here, all right, that missed the first entry and they did not get stopped out. I got stopped out at 100.81. But remember, I share sized for 40 cents, but I only lost 19 cents. So I lost about a half of a lot on this, and I even got a partial fill. So it was only about a quarter loss for me, okay? But here's where I want to talk about real specifically. On breakouts, guys, you cannot use stop market orders. You can't use stop market orders. The only way you're allowed to use a stop market order is if you anticipate the breakout before it breaks over the whole number, okay? If you're putting your order at 100, in this case 101.02, right? 101.02, and you use a stop market order, you're going to get filled like 20 or 30 cents late. You see this big topping tail right here? That tail went to 101.49. Okay, what I want you to take note, okay, is one of the members in our room says, hey, Jared, I share sized for 40 cents, okay? I had an order at 0.01 and I was filled on the pop right here, on the pop at 101.32. He was filled 31 cents late. And he goes, I got immediately stopped out, okay? It came right back down. See the topping tail came right back in. It came down to 100.56. So basically what he's saying is, I got filled 31 cents late on the entry, and I got slippage on the exit. So on a trade he should have lost about 40, 45 cents on. He ended up losing about 70 cents on, or 65 cents on. About 50 or 60% more than he wanted to lose. And then his comment was simply, it was a quick loss, impressive computer shakeout. You guys can read it right down below. Impressive computer shakeout. Well, it was an impressive computer shakeout, and that's what happens sometimes on breakouts. But guys, how is it that he got filled at 101.32? How did he get filled at 101.32? There's only two ways that's possible. He either used a stop market order, or he used a stop limit order with a 32-cent limit, right? Well, if the stop loss is 40 cents, you can't give it 30 cents on the limit. That's crazy, right? That means you might have double the stop loss. So in this case, on a 40-cent stop, I would recommend giving it about 10 cents on a stop limit order, okay? 10 cents, okay? Not 32. Well, in this case, he didn't use a stop limit order. He used a stop market order, okay? Now, think about what I'm saying. As soon as this stock popped, okay, he wasn't going to get filled at 101.01 because there was no shares there. It popped. Boom, blast off. That's what you want a breakout to do. That's what breakouts are supposed to do. Now, what they're not supposed to do is leave a big topping tail like this. But breakouts are supposed to pop hard. So if you use a market order, you are at the mercy of the market. You're at the mercy of the market, guys. You don't want to be at the mercy of the market. When these things break, okay, this stock, all right, let's go back down. It's trading at 102.56 right now, okay, as we're talking about it. But let's go back to 101. Guys, it printed 163,000 shares at 101.00, and then 6,700 shares, okay, at 101.01, 25 at 02, 29 at 03. All the shares on this thing, most of the shares, guys, were filled at 100.00. So if you use a market order over 00, 01, 02, 03, you're going to get filled way up here, way up here. Guys, this is a hot topic that I talk about in professional trading strategies, okay? 450-page book. Guess what? 80 pages are dedicated to level 2 and order entry. I don't care how great the pattern is. I don't care what your teacher taught you, and I don't care what some moderator in some chat room told you. Most people are full of shit, okay? When you have a breakout, you are not using market orders. For the entry, for the exit, you're always using market orders. I want to be clear. So for the entry of a breakout, use a stop limit order. Do not use a market order. For the exit, for your protective stop loss, use a market order, a stop market order, okay? Because if this thing pops and it fills 10, 20, 30 cents late, that's where you're getting filled. See, if you use a stop limit order, you can only get filled in the range of your limit. So if you put an order, say right here, see mine right there, guys, 101.01 to 101.09. I have to get filled in that range or lower. I can get filled at 100 after it breaks, right? But I have to get filled in that range, 101.01 to 101.09, 8 cents. I chose that range, so that range is acceptable to me, all right? Don't use a market order. You'll get filled at 101.32 like our chat room member did, okay? Please don't do that. Guys, why am I making such a big deal out of this? Because most of you guys are losing money unnecessarily because you don't know what order types to use. You don't know how much room to give a stock to get entered. And then when you get out, some people are using limit or stop limit orders to get out. Well, what if it blows right below your limit order? Guys, I saw a guy with $800 risk, which means he was supposed to lose $800 on a trade. I saw him lose almost $8,000. Okay, you're like, yes, it was back in 2008. The stock was MF. It was a financial crisis. The stock came out, the company came out and said, we might go bankrupt. The stock tanked, blew right through his stop limit order on the bottom for his stop loss, and he lost almost 10 or 15 times what he wanted to lose. Ouch. So hear me out, to be clear. On your entries, breakout entries, stop limit orders. Stop limit orders. On your stop losses, your protective stop losses, use a stop market order. For all your target areas, use a limit order. Okay? I want that to be very clear for you guys. Now, one more thing I want to talk about. All right? Again, I'm not about the bullshit. I'm about the truth. Okay? So, you have down here, guys. All right? You have down here. Now, my target on the second trade, I took this trade 2 times today. And the first one, I took about a half loss, quarter loss. And the second one popped. Now, I want you to take note. I didn't get full shares on either one of these trades. Okay? But take a look at this. Guys, my target was 101.49. And my stop was 100.81. Okay? Now, that order was in at 1021.26. 1021.26. My target was 101.49. All right, you can see it's almost 2 to 1. A little more than 2 to 1. You ready? 10:23 in the morning, CTXS popped up to 101.49. 101.49. Guys, I got that many shares. 0. It hit my target and did not fill me for anything. See my target, 101.49. 101.49, you can see it, okay? You can see the order numbers for it, okay? The account number, the order number, none of this fluff bullshit that everybody else is out there doing, okay? This is real, all right? It went to 101.49. I didn't get filled. You can see it. It would have filled me. It would be in blue right now. It says you're out. It didn't fill me. It came all the way back in. I got some shares off at 101.20. All right, and I got some off at 101.11, and I got the rest off at 100.80. Ended up being just above break even. If this was somebody else in a different chat room or a different moderator somewhere, they're boom, guys, we hit our target, boss trade. That's bullshit. You didn't hit your target. It went to 101.49. It didn't fill you, and guess what? It came back down so fast. You could have never gotten filled on that, right? You could, and it never went back up. It stopped out and then went back up, okay? So I am talking to you guys about the realities of trading. So you want to know why traders struggle so much? Because nobody talks about this stuff. Nobody talks about somebody getting filled at 101.32. You're supposed to get filled at 101, right? My target's 101.49. It went to 101.49, came right back down. I can't make it up. You can see it on the screen. 101.49 at 10:22 a.m. It popped at 10:23 and never filled me. My order was in there for a minute before this thing even popped. Went up there, printed a couple hundred shares, did not take my shares, and came right back down. Those, ladies and gentlemen, are the realities of trading. This is still a great pattern. Just didn't work out exactly the way we wanted it to on that particular day, on this particular day, okay? But you want to know why a lot of traders break even, or a lot of traders or lose a little bit of money, or when you see some chat log in a chat room and it says, oh, buy here, exit there, and they didn't really get that price? I know, because I watched level 2. Dark pools, bullshit. Don't tell me about dark pools, okay? Don't tell me about who you know and this and that, okay? That's crap. I'm telling you, as a professional, guys, I don't drive around in Ferraris, okay? And I don't fly in private jets because I don't know how to trade. I do those things because I do know how to trade. And I've parlayed that into real estate investments and a very, very healthy lifestyle, handsome income here at 40 years old, okay? Because I want to talk about the realities of trading, not the hype, hoopla stuff. Yeah, that stuff, I guess, sells better for people, but that's just not real. You want to make real money, you come to Live Traders. www.livetraders.com if you want to learn the realities about trading. Okay? Have a good one, guys. I hope you learned a little bit of lesson about order entry, market orders, stop market orders, limit orders, stop limit orders. Okay? If you want to learn more, check out the website. There's a free ebook at livetraders.com. And also, you can check out Professional Trading Strategies. It's 16 hours, 450 pages of the best information in the industry. Have a good one, guys. Jared Wesley, Live Traders. Take care, and I'll see you again soon.
That's what I'm talking about, guys. Professional Trading Strategies, the best book in the entire industry. That with a little bit of 06 Dom, and you just can't go wrong. That's Live Traders lifestyle right there. I'm telling you guys, you want to be a real trader, you want to be a profitable trader, you want to be a flexible trader, you want to spend time with your family and friends, you want to be on the top of the list, you want to be the best, you be a live trader.